STL, that's Sterlite Technology Limited. The company very recently launched a manufacturing facility in South Carolina with an investment of $56 million. Also recently, the company announced they've partnered with TruVista, which is a 100-year-old plus company in the United States for US rural broadband services. And TruVista too will be making some investments. Ankit Agarwal, the MD at STL, is now with us on the show. Ankit, morning, and thank you very much for joining in. First, details about this US manufacturing plant. What would the production capacity be? The peak revenue generation?
Yes, hi, good morning. Thank you for having me on the show. So yeah, we're very excited about having this facility come up. It's been a dream for us for a while. Just in setting the context, US is one of the largest markets globally for optical fiber. They're right in the midst of a multi-year network build-out for 5G, fiber to the home, fiber to enterprise, as well as for rural connectivity, where there is a $42 billion project called BEAD, which gets launched and goes live at some point next year. So the whole thought process was to tie up with our customers that we have. They have committed to us some sort of long-term agreements as well. And we recently launched two partnerships. One was Windstream, which is in the midst of a $2 billion network rollout across 18 states, as well as TruVista, which is also from the same location, same locality, and is also looking at providing broadband services and various applications in the region. Overall, for us, this is part of our overall strategy to become world top 3, which is we're very excited about. And in terms of North America specifically, this helps us provide better lead times, better customization, and better R&D for our customers locally.
Right. Ankit, hi, good morning. Prashant here. Would you want to put a number to it? As my colleague put it, what could be from this particular facility the peak revenues? At 100% utilization, what would you make?
No, so we won't be able to comment for competitive reasons in terms of specific revenues from this facility. But overall, what we had talked about was our investment and Capex this year would be in the range of 300 to 350 crores. This is part of that investment. And certainly, as we see the capacities get fully utilized in the course of next, say, 4 to 6 months, we do believe that this will be a meaningful part of our overall capacity. To give some background, overall, we have planned about 50 million in fiber kilometers and around 42 million in cable capacity. So with this US facility coming up, then we'll be fully invested in terms of our capacities.
Ankit, last time you were on, you were saying that inventory in the US is quite high, and that's a problem. And you said that as we go into Q2, things perhaps will look a little better. Can you give us an update?
Yeah, absolutely. So, Prashant, I think that still continues. And even most recently, during our discussions with customers, we continue to see both elements of inventories, which continue. There will be still some period, I believe, around 4 to 5 months where the inventories will take time to reduce, as well as with the higher interest rates, probably some amount of second thoughts or slower deployment in the short term. While all our customers and other customers we're speaking to, potential customers, are talking about continued commitments from a 3 to 5 year perspective. So that's why we are also looking very closely at other geographies as well outside of US, like Europe, of course, our home market in India, Australia, etc., where we can look to increase our volumes.
All right. Hi, Ankit. Good morning. Nigel on this side. Ankit, what's your normal asset turnover?
So typically, for most of our investments, this year we are looking at Capex of around 300, 350 crores. Typically, we look at return on our assets, return on investments in around 3 years is typically what we look at as return on investments. In the past, what we have seen is with various cycles of fiber and cable, we've typically seen faster returns on cable. And sometimes the glass and fiber investments take a little bit longer.
Okay, all right. Now, on this 300 crores that you're putting at optimal levels, what kind of revenues can you get? The payback period you've given us, I wanted the asset on.
Yeah, so say, for example, if you take a 5 million FKM capacity and you take on average about $15 to $20, you can make about $100 million of revenue annually on that investment. So that's typically the ratio. And we typically, the way we look at it is that we want to book with our customers for 2 to 3 years forward. And again, just depends back to the market scenario in terms of how they're willing to commit in terms of volumes and prices.
Ankit, you said US perhaps will take another 4 to 5 months to recover?
Yes, that's right. I think it's a combination of 2-3 things. I think one is the inventory that I spoke about. The second is the BEAD project, which I spoke about, which is a massive project by the US government. The actual funding will start flowing in probably second half of next year. So that will add a lot of impetus for our current customers and potential customers to scale up their network rollout.
So if US takes another 4 to 5 months, we're looking at a potential recovery only in Q4. I think you'd earlier hoped for a recovery sometime in Q3. So there is a bit of a delay in the US recovery. So in that sense, will you still be able to achieve your full year revenue guidance that you've given of 7 to 9%, or do you think that will be at risk considering US is about 29-30% of your top line?
Yeah, absolutely. So as I said, it will now be a function of what more we can push across North America as well as in the other geographies. We continue to be bullish on other markets like Europe and India. So that's really where a disproportionate focus is going to increase our sales there. We do have our Italy facility running well. We do have our factories in India running. So the big priority will be to reposition some of our sales in these markets.
But you're holding on to you're confident about achieving your full year guidance?
We're still evaluating it. I will probably have to come back post our results.
Okay, thank you very much, Ankit, for joining in. I think that's the key takeaway, that US demand is still going to take some time to recover. So the company is evaluating its full year guidance.